This is Brad Berry, Chief Investment Officer and Portfolio Manager with Dynamic Wealth Group. Welcome to this market and economic update. In this video, we'll discuss recent trends in oil prices and how they might impact markets and the economy. This is an important topic right now because markets have been jittery the past few weeks. The S&P 500 has now experienced its first 5% pullback this year due to the Fed, a decline in technology stocks, and heightened tensions in the Middle East. It's important for investors to remember that short-term market declines are both natural and to be expected. Rather than focusing on day-to-day market movements, it's far more important for investors to understand the bigger picture trends. Over the next few minutes, we'll discuss how geopolitics and oil prices might impact these trends over the next several months. If you are watching this on our YouTube channel, please be sure to subscribe and turn on notifications so you do not miss any future videos. Also be sure to hit the like button. First, oil prices have risen about 8% so far this year, but they are still well below their recent peaks. That occurred in early 2022 when Russia invaded Ukraine and oil prices jumped above $120 per barrel. That episode is important because higher energy prices drove inflation as well. This was one reason the Fed had to act as swiftly as it did in hiking interest rates to prevent prices across the economy from increasing further. Higher energy prices, including gasoline prices at the pump nearing $5 a gallon, was one reason many economists feared that a recession would occur. Thus, oil prices are a way in which global events can impact the markets. Investors are especially sensitive to this today because of the effects of oil can have on inflation and the Fed policy. Second, a key difference between today's environment and the past is that the U.S. is the largest producer of both oil and gas in the world. In theory, this helps to insulate the U.S. somewhat from global events, at least relative to historical periods such as the 1970s. Specifically, this chart shows that U.S. oil production has fully recovered from the pandemic and now exceeds 13 million barrels per day. That said, the U.S. is still dependent on global energy markets. Not only does the U.S. still import foreign oil due to the differences in the type and quality of oil here and abroad, but oil is a global commodity, so price fluctuations can impact U.S. consumers as well. All in all, higher oil prices can certainly impact inflation as they have so far this year. Greater uncertainty around inflation also impacts the timing and the path of Fed rate cuts, which makes the market highly sensitive. Finally, these factors not only affect the broad economic outlook, but impact investment portfolios as well. Specifically, this chart shows that the energy sector is now the best performing group in the S&P 500 this year, especially with the decline among technology stocks. What is interesting is that the energy sector has behaved quite differently from the rest of the market over the past several years. From 2014 to 2020, energy was among the worst performing groups due to overproduction and the collapse in oil prices. However, the energy sector surged in 2021 and 2022 as the global economy bounced back. While the past is no guarantee of the future, and regular followers know that we are big believers in preparing for the future and not attempting to predict the future. This does show, however, that the energy sector is an important component of a diversified portfolio that can help diversify and balance risk. Investors should continue to stay diversified with portfolios that include different asset classes, including broad exposure to all sectors of the stock market, but also diversify among different approaches, including strategic, tactical, and alternatives. We hope you found these insights valuable. If you are a financial advisor and would like more information on our multidimensional approach towards asset management, please visit our website at dynamicwg.com or reach out directly by emailing us at info@dynamicwg.com. If you are an individual investor, we are happy to address any questions you may have and put you in touch with a qualified advisor if so desired. Until next time, take care everyone and make smart, logical, and fact-based financial decisions.